Welcome to this webcast presentation for Etteplan's financial statements for 2021. My name is Juha Näkki. I'm the President and CEO for Etteplan. And after the presentation, there will be a Q&A session where you will be able to also ask questions to myself and also our CFO, Helena Kukkonen. Looking at the contents of the presentation first. So as usual, we will go through the highlights of the year, a little bit also on Q4, on the financial development there. We will look how we did against our targets, and after that there will be the Q&A session. So this is how we will proceed. But moving on straight to the highlights of the year. So this was of course a year after the pandemic year of 2020 when we were able to really return to a strong growth path, and for the first time we were able to be above 300 million euros in revenues, which was one of the landmarks for us on our growth path. And of course, also profitability-wise, we entered a new area where we exceeded the EBITA profitability of 30 million for the first time. So overall, a very solid year. Growth was on the fourth quarter was strong, over 20%, and also for the full year at 15.6%, out of which organic growth was 8.9%, of course, against a COVID year of 2020, but still strong growth overall. In particular, the growth in software and embedded solutions was strong for the full year, above 25%, and we even exceeded 30% for some quarters. And also in China, the market was very good throughout the year, and we were able to increase the hours sold to the Chinese local market and local customers there by more than 55% in the full year, which was a good achievement from our Chinese organization. We also made several investments into growth. We invested in organic growth. We started up several new teams in different locations. We also made 5 acquisitions during the year, which were taking us towards our strategic goals. On the profitability side, we again reached our target level of 10% for the full year. On the final quarter, we were above again, as we were last year. And on profitability, our technical documentation solutions business was particularly strong, with 2 quarters exceeding or at 12% EBITA margin, so very solid. On the negative side, of course, the strong growth had a slight impact on profitability and also tied capital. So the operating cash flow was slightly lower than what we are used to and what it was last year, but still on a very solid level. And also the pandemic continued to have an impact on our business and our customers' business. And in Q4, at the latter part of the year, we also saw a little bit more sick leaves coming in, first through the sort of releasing some of the restrictions and people going out and more sick leaves coming in from that. And then in December in particular, more COVID cases coming in with our personnel, which had an impact on our revenues and also a slight effect on the profitability. But overall, a very solid year, returning to very healthy growth again. And with these results, the board of directors is proposing a dividend of 0.40 per share. And if we look a little bit on the operating environment for the year, so the demand situation was quite good throughout the year in all our markets. In the third quarter, after the summer vacation, and perhaps due to the component issues that some of our customers had, we had a slight slowdown in the demand, but that recovered fairly fast in the beginning of or actually at the end of the third quarter already, and then in the fourth quarter the demand was strong again. So overall, quite good demand situation for the year. Pandemic, of course, continued to have an impact. So still, travel restrictions continued, especially the international travel to Asia, etc., which clearly had an impact on our customers' business and also our own business. So this had some impact. And also now in Q4, as mentioned earlier, the sick leaves started to have an impact also on our business, but also our customers' business as more and more people were at home. So this had a little bit of a negative impact, which we anticipate to be temporary as the things are now progressing. But nonetheless, the pandemic was still there, and of course it's still there. But I think our customers have adapted to the situation very well, and our customers' business is currently developing very positively. So we have a high hope that next year will be quite good in terms of demand again. If we look at the development in different markets where we operate, so in Europe, the situation was relatively similar in all the countries. So overall, the market situation remained fairly good in all the countries where we operate in Europe. And in China, the demand situation was very good or good for the full year. No major differences between the different countries. Of course, different restrictions related to COVID having a little bit different kind of impacts in different markets. But overall, fairly solid in Europe. China, really good for the full year. And if we then look a little bit on the split of revenue per service area first, so engineering solutions was at 56%, software and embedded solutions at 27%, and technical documentation solutions at 17%. And by country, Finland was 57% of the revenue, Scandinavia 23% of the revenue, meaning basically then Sweden and Denmark, which was a new country for us from the beginning of last year. And then Central Europe, 16%, and China, 4% of the revenues. Personnel-wise, slightly different split due to the fact that we are utilizing offshoring from China and also nearshoring operations from Poland, and also cross-selling across the country. So that's slightly different to the revenue distribution. Finland was 55% of the personnel, Scandinavia 18%, Central Europe 15%, and China 12% of the personnel at the end of the year. And if we then look a little bit on revenue by customer, so there were no major differences between the customer segments. Almost all customer segments were doing relatively well. Industrial machinery and equipment growing still, being the largest one for us at 16%. And then automotive and transportation growing slightly, medical technology growing slightly, but all the others remaining relatively the same. So industrial machinery and equipment, the largest one, energy, the second one at 13%, forest pulp and paper, the third one at 13% as well. But no major changes in the sort of customer segment split either. And then on the key figures, so revenue growth was 21.3% for the fourth quarter, so very strong quarter. For the first time ever, we exceeded 80 million euros and exceeded it by over 5 million, so that was a very good performance. Operating profit EBITA increasing by 10.9%, EBIT increasing by 10.5%, and EPS by 13%, so very solid development overall. And for the full year, the revenue growth was 15.6%, operating profit EBITA at 15.2% increase, EBIT increasing 15.1%, EPS 15.9%, so solid improvement throughout the year as well. And after a strong year last year when we were growing in all our businesses, we have also started this year quite strongly with investing into two new acquisitions. And the first one being Cognitas in Germany. And this is a technical information lifecycle management company, which will fall under our technical documentation solutions service area. Approximately 200 professionals, about 50 million euro revenues, and a very solid market position in Germany. With Cognitas on board, we will be a leading company in technical documentation solutions in Germany as well. Cognitas does have some effects from certain customer contracts from last year. They had a little bit of a hard time during the COVID period, and there will be a little bit of spillover from that effect to our technical documentation solutions, mainly profitability aspect in the first part of the year, but we expect this to then recover to the normal healthy profitability level, similar as ours is in the rest of the businesses during the year, and then from then on move forward as the rest of our businesses. In Züncor, we acquired a very strong embedded company in Sweden, which will significantly strengthen our ability to deliver embedded solutions and systems and projects in the Swedish market. And with this company, we're about 150 people in the embedded business in Sweden. The company had approximately 50 employees and approximately 5 million euros revenue. So this will be adding to our software and embedded solutions service area. And with these additions, then we have made the financial guidance for the running year with the numerical guidance that we introduced last year. So now we estimate that our revenue for 2022 will be between 340 million euros and 370 million euros. And the operating profit EBIT will be between 28 and 32 million euros. We see the market starting off quite strong demand situation right now. There are implications of the COVID-related sick leaves that has a little bit of an effect in the beginning of the year. And of course, there is uncertainty how the pandemic develops. On the financial situation currently with the inflation rising and potential interest raises, etc., there may be some impacts to the development of the demand with our customers. But still, nonetheless, we think that and expect that the demand situation will remain fairly good throughout next year. So with the good, strong demand situation, we anticipate to get to these kind of numbers. If we then look a little bit more in detail into the financial development, so in Q4 in particular, so revenue was at 85.3 million, very strong growth of 21.3%. And of course, the demand situation returned to a good level after a slight downturn in Q3. As mentioned earlier, holidays and especially sick leaves did have a little bit of an effect in the latter part of Q4 to the revenue accruals. Revenue from key accounts was increasing by 13%, and for the full year, of course, as mentioned, the development was strong, and we exceeded the 300 million mark for the first time. If we then look on the profitability side, so a 10.5% profitability on EBITA margin for the fourth quarter and 10% for the full year. So solid performance overall. For the first time, our EBITA was at 9 million euros, so that was again a new landmark, and of course over 30 million for the full year, which was a good landmark for us, and so on. And of course, we did see some quarters that were lower than last year in terms of profitability, but the investments into growth, of course, had a slight impact on the profitability numbers. Operating profit EBIT was at 7.8 million euros or 9.2% respectively for the fourth quarter, and for the full year at 25.8 million euros or 8.6%. So, and the acquisition-related amortizations were for the full year at 4.4 million euros, and the non-recurring items affecting the EBIT as well as they affected the EBITA were for the full year at 0.7 million euros, slightly less than in the previous year. If we then look a little bit on the profitability and the development of the different service areas, so in engineering solutions, the development was solid throughout the year. The demand situation was quite good throughout the year, and our operating efficiency was at a good level for the whole year. We had quite good success in our outsourcing business, and this contributed well to the numbers. So growth in this service area for the last quarter was 16%, and for the full year, solid 12.5%, and the margins were 10.6% for the last quarter and 9.9% for the full year. So very solid performance in this service area overall. And then moving on to the software and embedded solutions. So here the demand situation was really good for the full year, and we saw that continuing also in Q4. Of course, here the reduced availability of competent professionals, especially software developers, is affecting the business for us and all our customers and competitors as well. So this is something that has an impact on the way we run the business and the way we can grow. But nonetheless, we were able to really accelerate this year on growth, and the growth was very strong for the fourth quarter, over 30%, 32.2% to be exact, and also for the full year, very solid 25.8%. Of course, supported by the 2 acquisitions that we completed during the year, but nonetheless, very strong growth organically as well. Here we had in the profitability, especially in the latter part of the year, in Q4, we did make quite a bit of investments into establishing new teams, and especially in Sweden, we did increase the number of teams and made a lot of investments organically. This had a little bit of an impact on the profitability, and also our utilization of subcontractors in the business is increasing. We had more than 250 subcontractors in the fourth quarter, which is of course contributing well to our business, but still burdening slightly the margins. So this is why the margins are slightly lower than what we had last year. But overall, very solid growth, very solid development in the service area as well. And in the technical documentation solutions, again, very good growth in the fourth quarter, 20.8%, and also for the full year at 11%. And the operating profit, especially strong, very high, good operational efficiency, and also our MSI increasing to 82% even, and having an impact on the profitability. So very good profitability at 12% for the final quarter, and exceeding 12% or at 12% for the second quarter during the year. And also for the full year, the profitability was at an excellent 11.4% level. So it's a good starting point for us to continue for next year. And with these results, the earnings per share was for the fourth quarter 0.26, and for the full year 0.80. And again, the board is proposing a dividend of 0.40 per share. Cash flow was at 13.2 million for the final quarter, and 27.1 million euros for the full year. Slightly weaker than last year, which was exceptionally strong. So here, when we were growing, especially organically, the business was tying a little bit more capital, and therefore the cash flow was slightly weaker than what it was last year and in the previous year, but nonetheless very solid for the growth business that we had. Personnel at the end of the period was 3,629, so a clear improvement, 11.1% more than at the beginning of the year last year. And outside Finland, we had 1,624 employees, which was also a very good improvement compared to the previous year. And here, of course, now we need to remember that with the additions of Cognitas and also Syncor, so we are now currently running at close to 3,900 employees in the company, and we expect to grow and exceed 4,000 employees during H1 this year, and we are working towards that goal. In the income statement, nothing major to what I have already mentioned, and on the balance sheet, nothing major either. Of course, the acquired companies coming into the balance sheet are expanding the balance sheet a little bit, and also the loan that we took for the acquisition of Cognitas, which was drawn prior to the year end, had slight impact. And the total assets were at 253, total balance sheet at 253 million at the end of the year. And looking at how we did against our targets then, so on the growth, our target is at 500 million by 24 or in 24. Of course, we are far from it still, but now we anyways return to a very strong, solid growth path, and we are at that 300 million currently. A long way to go to 500 million, but we are working hard to get towards that direction and are confident that we are able to get there at 2024. On the revenue outside Finland, 43% for 2021, but now with the addition of Cognitas and Syncor, so we are already at 46%-47% and closing in on the 50% target quite well. On the managed services share of revenue, we were at 63%, and on the profitability target of 10%, we were matching again. Solid development in that area. A solid year and good performance returning to the growth path, you know, exceeding 300 million in revenues, exceeding 30 million in EBITA. We are happy to return to those levels or get to those kind of levels and work on it to move further next year or in the current year. Now it's time for questions. Please, operator, you can take it from here.
Thank you. Ladies and gentlemen, if you do wish to ask a question, please press 01 on your telephone keypad. If you wish to withdraw your question, you may do so by pressing 02 to cancel. There will be a brief pause while questions are being registered. Our first question comes from Juha with Inderes. Please go ahead.
Hello, gentlemen. This is Juha from Inderes. Congrats on another solid performance. I was wondering about the growth when it goes forward and thinking about the payback times of acquisitions versus organic growth. Maybe you could shed some light on that. What is the more efficient way to grow and how are the profitability impacts of this in your experience?
Having a bit of problem in hearing and understanding. The line is somehow bad. Could you please repeat the question?
Well, I can definitely try, but if the line is bad, then it might be a significant problem. I was asking about payback times with acquisitions versus organic growth.
Basically, of course, organic growth is of course that's payback time is quicker. Of course, depending on the success of the organic investments. But of course, if you look at the payback for acquisitions, so they are of course depending on there are of course different valuations to different kind of companies. Smaller ones are slightly cheaper in terms of valuation. Larger ones are then more expensive. But they are all riding on the fact that how well do we get the synergies that we have planned. It's a really tough question to answer. In general, I would say that of course organic growth is coming at a faster pace with the returns. But also in acquisitions when we are really able to work with the synergies, etc. So we can accelerate the payback times quite nicely and really generate value for our shareholders. Unfortunately, I cannot give you a more detailed answer on it, but it really depends on the case. So that's how it is.
Yeah, that's very understandable. Perhaps you could comment on that, whether the payback times for acquisitions have actually kind of longer or because of the valuations going up, or is it still the same as in the past?
I would say that well, at least the asking prices are going quite significantly up at the time, but still, I mean, overall, maybe the trend is a little bit upwards in the valuations, but still, I think you can find really good deals with valuations that will still generate value for our current shareholders. And I think that still this is there's a good momentum to still make very good acquisitions that are creating value. So the trend is at slightly higher valuations, but still you can find good deals where you are able to generate value immediately.
Yeah, fair enough. A final question also regarding profitability. I was wondering if there is still a significant difference between the profitability in Finland and abroad, and also Sweden and Europe could be separated here. So basically what I'm thinking about whether the international growth is kind of lagging in profitability because you are smaller and not such a strong player in this market. So, and whether you see this improving in the future.
Well, of course, when you are in a country, so of course you need to have certain kind of structures and certain kind of financial organizations and other types of supporting organizations in place. And when the businesses are smaller, so of course the burden of the structure is a little bit heavier. So I would say that in smaller countries, it is burdening the profitability slightly. But now that we have been able to grow to fairly sizable organizations in different countries, so I would say that the potential to reach similar profitability levels or even above in certain businesses in also other countries is possible. So there is not anymore a big difference between the profitability of Finland and the other countries. It really depends on our own performance and how we are able to sell, what kind of services we are able to sell, etc. But if there would be very small countries, so of course in those countries it might be the structures and the reporting, etc. These are burdening the profitability levels to some extent.
All right. Thank you very much. That's all from me.
Thanks.
Our next question comes from Vincent Armad with Denso Capital. Please go ahead.
Hello, can you hear me? Hello.
Hello.
Can you hear me?
Yes, can hear you, yes.
Yeah, okay, perfect. I have several questions. Maybe the first one is about the negative impact of sick leave in Q4, if you could size it.
Basically, we have not disclosed how much the impact is, but of course, in some of the countries we are paying full salary, so there is full cost without any revenue for people that are on sick leave. So of course that does have an impact on the profitability. There was about in the fourth quarter compared to the other quarters of the year, so there was about maybe 20-30% more sick leaves than in the previous quarters during the year, and also the last quarter of 2019. So the increase was fairly substantial, but the full impact on profitability that we have, of course, to some extent calculated, but have not disclosed. But hopefully this gives you a picture of it.
Okay, great. And about Q1 2022, because obviously you will have again some sick leaves impacting, I assume, sales and profitability. How is the situation now compared to last year? Would you say it's already returned to normal, or do you have more sick leaves compared to last year, again in February?
Well, I would say that currently, unfortunately, I'm riding a little bit on feelings. I don't have data for that yet. But I would guess that in January the situation was fairly similar to December, but then it would be easing out as we move forward. This is at least my anticipation, but it's really hard to tell how the pandemic has affected and whether people have worked or not. It seems that with the Omicron virus, some people don't have any symptoms, so they can actually work remotely. Some people do that, some people don't. So it's hard to predict.
Okay, great. About acquisitions, if you just could help us with the contribution to sales you expect in 2022. I calculated roughly 30 million euros. Would you say it's the right assumption, or is it too much?
If you take into account the fact that the acquisitions that we completed in 21, so I would say that 30 million, I mean, they were already in, most of the acquisitions were in for at least a part of the year. So I would say that 30 million is maybe from the acquisition so far completed, 30 million is maybe slightly on the excessive side. Maybe 25 would be closer to the right number or right level. So most of the acquisitions, Tech Partner was in for the full year, FIT for 3 quarters, etc. So quite many of the acquisitions completed last year already had an impact on the 21 figures. So maybe 25 is the right level.
Okay, great. Now about the margin guidance for 2022. So it's a bit it's a wide range, and I assume you are conservative. Just to have the negative and positive contributors to this margin. So subcontracting, you expect it to remain high or at the same level in 2022. That's the first one. Second one is about acquisition. So you said it could be a bit dilutive in H1. That's for the negatives. For the positive, could you elaborate a bit on pricing and obviously leverage from the organic growth?
Yep. Well, if I start with the sort of pricing impact, so pricing is in the current environment. There's a shortage of employees, and therefore the pricing environment is fairly good. So we are able to increase the prices. Of course, I mentioned the acquisition of Cognitas, where we have some spillover from customer contracts from last year, so that will have a slight impact, but not major. And all the other ones would not have any negative impacts at all. So that's how it goes. And then on the overall margin, so of course this is a quite sensitive business in this sense. So if there are market disturbances, for example, if the COVID continues or let's say the inflation raises prices to the extent that our customers actually have to start cutting cost, so then the demand situation can be hit fairly fast. And if that happens, then of course it's quite difficult for us to remain on the very high margin levels. But we don't see things like that, but that's a possibility. That's why we have a slightly wider range. On the positive side, of course, there are still things to improve. We could have done still better in some businesses during last year, and there is still room to improve on certain things. When we are able to generate new kind of services for our customers with new kind of added value, we are of course able to have higher margins, and if we can move forward with this, so then there is the potential upside as well. But this is of course, it requires a very, very good performance overall, and it requires the market to stay very, very good throughout the year. So that's how it is.
Okay. And maybe 2 last questions. The first one is about the streamlining you disclosed. I think it's in Germany. Maybe have less entities, so maybe generate a bit of synergies between the different businesses you acquired there. So is that some savings that we could expect for 2022? That's the first one. And the second one is more about the higher range of the guidance. So if you said 370 million euro minus 25, which is acquisition, so it would mean 345. 345, it would mean more than 10% organic growth. So are you confident you can find enough people in terms of recruitment to achieve that kind of organic growth?
Well, if I start with the growth, so we have built a very good, solid recruitment process and a very strong recruitment engine. So we were able to find a substantial number of people during last year. So we believe that if the market is strong and we make a really good effort, we believe that is possible. But it's going to be extremely difficult, and it's going to take a lot of effort to really get there. So that's how we see the growth path in that. I'm sorry, the first question was about...
Yeah, the streamlining in
Yeah,
Germany.
Right. Yeah, Germany.
Yeah.
Yeah, I mean, of course, in these kind of cases, so we of course look for synergies, especially in the support functions and also in the business functions. And yes, we do see that there are synergies with the fact that without the acquisition, we would have needed, as we are growing also organically, we would have needed to invest into our operations in a certain way. Now, perhaps we can, combining the operations, do this a little bit smarter and find synergies from that angle. So this is, of course, something that we are looking at and will most probably be able to find as well.
Okay. Just one last, if I may. If I understood correctly, you said you have already drawn the debt for the Cognitas acquisition by year end, right?
Correct.
It's already in the balance sheet.
Correct. Yes. So
Okay,
it was the loan was drawn before the year end due to certain agreements, and then of course it was paid out when the acquisition was completed. So that's how it was.
Okay, thanks.
As a reminder, if you do wish to ask a question, please press 01 on your telephone keypad. At this time, we have no further questions. I will now hand back to our speakers for a final remark.
Okay, thanks a lot. Yeah, I think that we did really well in the whole pandemic time. So in 2020, we of course were not able to grow, but we were able to defend our position with the customers and really also work with our offering development, so that we would be able to accelerate when the market returns. And now in 2021, we did exactly that. So we were able to accelerate on our growth. So we exceeded the 15%, former 15% growth target. And now we are very much looking forward to continuing on a very strong, solid growth path and returning to or moving fast again towards our 500 million target. So working hard towards that, and of course, if you wish to ask any questions to us, so feel free to get in contact with myself, our CFO Helena Kukkonen, or our SVP of Marketing Communications, Outi Torniainen. So please feel free. But at this time, I want to thank you very much for listening, and let's see how this 22 turns out. But we are working hard to get to our target levels and really return on a strong growth path. Thanks a lot.